welcome to the TaiyangNews Solar Leadership Conversations 2025. We are here in Shanghai at SNEC, the world's largest solar show. My name is Schmela, and I'm the Managing Director of TaiyangNews All About Solar. And I have here with me, it's almost a tradition now, Yan Zhuang, the President of Canadian Solar, and we want to talk a little bit about what's going on in the market. This is not so pleasant actually to talk about the solar market. We know we've been long in this business that the solar roller coaster goes different ways. At the moment, and for quite a while, it has been going down. So we are seeing record low prices. The market has been growing. It's probably slowing down this year. We have huge overcapacities. Many manufacturers are presenting red numbers, and yeah, there's also no end to the overcapacities in sight. So, Yan, when will we see the light at the end of the tunnel?
Well, I have always been, since more than a year ago, maybe 2 years ago, I said, when the downturn started, I said I'm against the statement that we have another cycle. And I don't think we should continue stating that how do we go through the cycles, because this is not the repeat of the cycles. This is actually a fundamental transition of our industry. Our industry has entered into a commoditized period. So people probably more talking about overcapacity, and people are talking about the geographical decoupling of the supply chain. But people don't talk about something which is even, to me, more important, is the real crisis coming from the value of module to the investors. So in the past, the cost of module was like 60% of the total EPC cost 20 years ago, like 15 years ago. And then it came down to 30% a few years ago, and now, actually last year, this year, in a solar system, the module cost, I'm talking about the utility scale, is only less than 20% of the total EPC cost. If you add on average 3-hour storage into the system, and the module cost is less than 10% of the total cost. And the storage, the 3-hour storage, is like 47% of the total cost. However, on the manufacturing side, the capex density, like the capex investment you need to build a module, the full supply chain, right, from silicon down to module, actually is more expensive than the 3-watt-hour storage. I'm assuming 1 watt of solar, 3 watt-hour of storage. So you see, to investors, okay, the value of module is so much less than storage. However, it is more expensive to produce module. And we are way more than investing into modules. So this is the reality we're facing. So that's why we are experiencing this very fundamental transitions. So if you ask me what is the light to the tunnel, I don't see it this year, I don't see it next year. The year after, I'm not sure. But one thing I'm pretty sure is this round, the consolidation, will go very deep, will not stop until it is really consolidated into a much less number of players who are not speculators, but long-term players who are willing to take the fact that they need to take much longer time to create value. Because the module cost proportion is so low, any investment you do in technology, the value creation takes longer time. So this is the reality.
So we won't see those guys coming quickly in anymore that we've seen in the past, buying some turnkey equipment and being able to produce decent products with high efficiencies at decent cost?
Well, so I think the technology differentiation takes time. It really takes time. Because in the past, when you have 1% efficiency increase, right, which was easier than today, right? Today, 1% efficiency increase is more difficult, more expensive than 10 years ago. But the value creation out of this 1% efficiency improvement now is less than 10 years ago. So, and when you're talking about consolidation, people are talking about bankruptcy, right? That is, we all know it's slow here in China. And in terms of capacity, you have active capacity, you have idle capacity. People would continue to invest in active capacity, continue to upgrade, so they can win orders. Of course, may not have profit, but they continue to invest, to upgrade, and to win orders, to keep the lines active. While you have the idle capacity, then nobody is going to spend a dime on it, right? And if this lasts for 2 years, automatically the idle capacity will be gone. So it's not going to be worth for any further investment. So this is the reality. That's what I'm saying. So I don't see it this year, I don't see it next year. Because this kind of consolidation is also very slow.
Even if it goes slow and takes its time, there will be winners and a lot of losers. How do you think do companies have to look like to be among the winners?
Well, the winners has to be financial healthiness. They have to have the financial means to sustain. As I said, the consolidation and also the technology differentiation, value creation is becoming longer cycle, much slower. So it takes longer time. You have to be able to survive for that longer time. So you need to have the financial means. So that's number one. Okay. Number two, you have to be able to continue spending money on R&D and continue upgrade your capacity and continue coming up with new technology, even though the value creation is much longer time. So you have to be able to continue to do that. So technology-wise, this is important. And there's a second thing about technology is the technology value creation is going downstream. It's migrating to downstream because solo asset starts to change. Solo asset now is the return of the asset is less dependent on the income cost. It's more dependent on the trading price. It's the revenue side that matters more to the return on investment. So if that is the case, then what is more important to the trading capability? That is storage, right? Without storage, you don't have option. You cannot trade. And it is power electronics, it's the energy management system, it's the trading algorithm. So those things, and also, of course, the application, the system integration, the hybrid, the weak grade, the off grade, those things, they create more value. So the companies who is capable of creating value downstream, create a technology value downstream is also very important. It's going to help them, right, to create more value. And another dimension, okay, I said financial healthiness, I said technology value. The third thing will be a culture value, which means your cross-cultural leadership to overcome this geopolitical decoupling, right? This is very important. It's very difficult for most Chinese companies. This is extremely difficult. Okay, we can talk for another hour on that, but I guess
I understand.
No, maybe another. The last thing is the business model value. A company needs to have a business value, meaning your innovation is not only on technology and product, but also on your business model. The reason we have been profitable is actually our profit coming from the US, which is cultural value, and also our storage. Storage is a business model innovation started from 10 years ago.
Right, and for a long time you, of course, also had the developing side of things. I think you were one of the first actually to invest in an external developer. You bought Recurrent actually, which was actually a nice business from the beginning. I recall correctly. But do you see when it's about trading that companies really have to have such developers, that they really also have to be able to sell the kilowatt hours and not just the watts anymore, but the kilowatts or the kilowatt hours?
Well, I have to say, solar, renewable energy, especially solar, is a very new industry. It's fast changing, fast expanding, right? The boundary is expanding fast. So, and unfortunately, most of the money invested on the manufacturing side and technology side, most of the investment is focused, concentrated in module manufacturing, over-invested, right? And most companies in this area, they can only be able to look at their business from manufacturing perspective. They can't, they cannot actually have a longer vision about the industry. So this is the problem. That's why we have so much money, so many investors, they only focus in this area. So actually, why did we start the storage business? It's out of the fact that we have recurrent in the downstream asset development. And 6 years ago, we started to develop the utility scale storage business. And then we realized how good the opportunity is. We finally realized, okay, 6 years ago, it is coming, right? While 6 years ago, everybody was busy on investing money to expand their manufacturing capacity. But we actually look at this differently. We actually became aware of this coming much earlier than others. So 6 years ago, we started investing in storage system integration. We even acquired a very experienced R&D team in the US on storage. And that's how, okay, we actually have this successful business today. In the first 3 years, it was investment more than profit. So that was the time we built up our capacity, right? Our capability. And then from the ground level system integration, we're moving up to our own containerization technology, system integration technology and the manufacturing process, and then up to PCS of our own EMS R&D, and also the battery cell. So you see, it's much longer term. It's not that, oh, somebody made money out of storage, we got to hurry up. It doesn't work that way.
Yeah, you even manufacture inverters, right? So I think, and it all makes sense. The question to me is only, how much can you do and how can you be good at all of these things? Because they are so different, right? I think an inverter is something different than a battery. Assembling a battery is different than going into cell chemistry. And then, of course, you still have the module, and even the module in itself has so many different requires so many different skills. So I think you can lose yourself at some point also. There are companies that even went into electrolyzers. So where's the end not to lose focus?
Well, so this is a very good point and argument, right? So my view on this, right, is regardless of what we do, right? We do module, we do inverter, PCS, storage, right? Remember, we're talking about the same project, same investor. So, as I said, our industry is very young. The boundary of the industry is quickly expanding. So, a successful company needs to adjust, to evolve, right, according to the industry trend. So this is not that, oh, you're not focusing enough, okay? Guys who have been super focused in module, what happened to them, right? So they lost sight about where the industry is going. They've been speculating in this manufacturing rush. They've been speculating. They did not really look into the industry, where is the industry going, and what should be a more sustainable strategy. So I would say, we have not been lost. And we know where the industry is going, and we've been patient. We've been investing We've been losing money, but we've been patient. We're confident that this is where the industry is moving into, and this is the right direction. And in the end, the results will come. So asset development, more than 10 years. Energy storage, 6 years. Inverter, actually 10 years. 10 years. And now we have our own PCS, right? We have all the large string inverters, three-phase inverters. We have them all certified. So we have our own EMS R&D centers. We even have our own battery cell that is up running, doing well.
Right, talking about the battery cell, you have all these, or not all these, but a number of battery companies who cater to the auto industry are also much, much bigger because they are catering to a gigantic customer. So, and obviously they have also huge R&D teams, right? One cannot do that if one caters to a much smaller segment, which the stationary segment is at the moment. So how do you see your competitiveness here?
So I have to say, industries in cycles. A few years ago, remember, there was a shortage of battery cell, and all profit went to them. And we couldn't even get the cell for our contracted projects. Even we paid deposit to the supplier. They don't ship to us. They didn't respect the contracts, right? So storage business is strategically very important to us for longer term. We have to take control on technology and the manufacturing process. However, it does not mean we will completely replace third-party purchasing. Okay, so we just want to have a portion of the supply chain that comes to our own factory. So we have the know-how, we have a team, we have a production line. So whenever it's needed, we can expand the capacity quickly. And also, since we plan to do that in the US, okay, whoever can do a battery cell in the US will be in high demand. So we cannot rely on other people sell battery cell capacity in the US because they're going to say, okay, I'm going to sell to you, but I'm going to keep all the profit. So that's going to happen, right? So if we want to do that in the US, we need to do that in China first to learn, right? But I'm glad that we have passed that period and our Dafeng 3 gigawatt hour battery cell capacity is running well. So it's more like a strategic positioning to actually control the risk.
Okay, so that was technology strategy. Let's talk a little bit about markets, which is also challenging these days. So we had China last year growing its global share again to 55% of demand. I think 330 out of 600 gigawatt or so. Now the legislation, the solar market design has changed during the middle of this year. There was a big boom in the first half. People anticipate that it's going down in the second half. So what's your take on this? I think China has been also a big market for you recently.
Well, first of all, China has been an important market to everybody, including us, but comparatively, our proportion of revenue more coming from overseas. And I think the recent policy change in China has triggered investors to hold their decisions. So I'm expecting a lower installation capacity in China in the second half. Okay, and next year, I'm not sure. It really depends on the provincial level decisions on the execution of the policy. So they're working on that. But the good side is, I think the new policy actually will provide a more healthy environment for storage business. So storage asset will be more functional, right, than being more mandatory. So I would say, and which is good thing, right? And also we should not expect China to grow like in the past few years, because that was very irrational growth. Okay, we should not expect that to be a norm. Right? That would be very, very wrong. That would be very speculative. So we anticipate this. Actually, I always have been anticipating this transition, right, from a very irrational growth into a very, rational growth. I think the irrational growth was a very important reason why we have so many speculators into this industry, because they always believe, I take this gamble and maybe next year the market will double again, so that then I'll be the winner. People always think that way, right? So just like gambling in the gambling house. But I don't think that's going to last, and it's now finally changed.
Okay, you already mentioned the US. Let's talk about the US. As they are simply the new government is really dictating a lot on what's happening on the planet today. So the US has been traditionally an important market for you. You're Canada headquartered company, so close by anyway. And recently, due to actually very attractive funding conditions, actually the market has been going through the roof, reaching 50 gigawatts last year. So what's your take on the US now with whatever is happening? I don't know. So it's very difficult. That's why I'm stumbling. But how to grasp that? How to grasp that?
So we have been dealing with the U.S. Trade policy since 2012. It's been a long time. So I have to admire Donald Trump. He's 80 years old, and we now are changing our plans every day because of him. So, but I would say U.S. will continue to be a very important market. So every 4 years they have a new president, and renewables will have it's a much longer term market, right? So the recent budget reconciliation bill passed by the House, it's not so pleasant. However, we believe that the Senate will be much more rational. As always, Senate has always been more factual based, more rational, more analytical, because we all know that House representative they only serve for 2 years, and the Senate is 6 years. And every 2 years, the entire House will be re-elected, and 1/3 of the Senate will be re-elected. But senators are more longer term. So, as always, so there's going to be more lobbying activities concentrating on Senate instead of the House. So we expect that the bill that's going to be passed by the Senate will be something different. However, we always prepare for the worst. So we have backup plans that is based on the worst case scenario, which is the bill passed by the House. And I can assure you, we have a backup plan, and the results will be something that is controllable. So we have the risk under control.
So, but for the moment, the plans are, can you just repeat once again? Because I think that's quite a bit what you're doing, and it's very ambitious.
I cannot just tell everybody what's our plan when that happens, right?
No, not the plan B, but at the moment, what the plan A is. At the moment, still once again, I think because not everyone knows what your plans are for the US in terms of modules, cells.
We have 3 factories in the US. We have a module factory in Dallas, 5 gigawatt of a module factory, which is doing really well. So actually, the reason we have profit in Q1 and profit in Q2 partly is because of that. And we have a cell factory plant and in Indiana, and also a battery cell and BESS system factory in Kentucky. So those the later 2 will be start running early next year. So this is our plan A. This is the existing plan.
Okay, maybe as a final question. So when we meet next year again for SNEC, how do you think the market will look different? So let's take a look into this crystal ball, and how will Canadian solar look different?
Well, a year later, I think we will still be profitable, and I think the consolidation will continue. And however, we're going to see more companies are trying to differentiate themselves, doing different things, and we're going to see more markets in storage. You're going to see Europe and Japan coming up with a lot of storage projects, because we have 91 gigawatt hour of pipeline, and we know those markets are coming up. We have a lot of pipelines there. And we have a $3.2 billion backlog on storage to be delivered this year and next year. And our storage, our residential storage, will actually take off next year in a scalable manner. So I think for us, I hope next year will be even better. And actually, I'm glad the consolidation is continuing. Actually, I think it's much delayed. The consolidation should have come earlier. So the industry is becoming more healthy, and more in control.
Thanks for your view. Thanks for the conversation. That was great, Yan.
Thank you.
Thank you.
Thank you.